Oh, yo. Hello. Hello. We're live, baby. Live. Back in action. Back in action. Oh, man. Matt Donnelly in the building. Vlog. Okay. We're in here. White, let's go, baby. Hyped, bro. Stocks looking great. Yeah, there's a lot of deals out there in tomorrow. Oh man, 8:30 in the morning. Woo! If it don't feel like the day before Christmas right now, I don't know what's wrong with y'all. God the Heavenly Father, Moontime baby. Big Blue CNC. Oh, we came to play today. Just trying to clear up some BS with 8 Father. Oh God. Yikes. Yikes. Okay. I do want to take a look at the S&P again, and you're looking down about 74 cents. I mean, we're sitting we're sitting at such an important level. It's kind of unreal. Right above the 100-day moving average. Right above it. I mean, with this move in after hours, we're just barely above it right now. Hester votes no for everything. I'm confused. What I miss? Win Lambo. Win Lambo. Oh yeah, he's coming. Win Lambo. Stop watching 8 Father and do yourself a favor. Oh, I watched one video from a long time ago from him where he just started screaming in AMC. Like, invest in AMC. When it was packed. That was pretty funny, I can't lie. I'm trying to get him to understand he's bullying other YouTubers. Yeah, I mean, that's very unproductive. You know, like, I have no respect for people that bash other people. Like, what are you on YouTube for? Like not just 8 Father. I'm not just calling him out here. Anybody. There's this guy, Strongman Finance. I can't stand his videos because you don't provide any value. You don't even talk about stocks. You just bash other people. You know, I can't stand channels like that. That's why one thing I strive to do is never, get involved with anything that is not productive. What time frame are we right above the 100-day moving average? That's on the daily candlestick chart. And that's the one that I really like to use when you're looking at the longer term trend. Just like we've seen for a majority of the year, this 50-day moving average, we would bounce off of this to a T ever since November 2020. Right there, once, twice, 3 times, 4 times, 5, 6, 7, 8, broke under it for a brief period, back above it, and then 9, and then 10, and then finally broke under it. And we've been under it now for a little while. Roughly the same period as back here. So, the 100-day moving average, that's been harder to break under. We've only been under that in October 2021 back here. And then now, for a brief period, November 2020. But we pretty much stay above those moving averages. Now, when you're under the 200-day moving average, that's when shit gets crazy. That's when it's just ridiculous. Julie Miller, oh shit. The first female of the night. Oh, what's going on? What's up, Tyler? Hope everyone is having a good night after today. Yeah, talk about a whipsaw. Jeez. If you were watching the S&P at the end of the day, look at those moves. That just, 1 minute moves of a tenth of a percent. That's a big ass. That's a big drop. And then you rallied right back up, came right back down. Everybody's confused. I mean, they don't know what direction to bet on. It's all about good vibes in here. Thanks for the streams, brother. Thank you for showing up, participating, asking questions, sourcing information. Appreciate all you guys. Crim Jamer in an ape suit. It's coming. Oh, that would be good. Need to get a Crim Jamer in an ape suit. Trey's video, it was like the set of Mad Money. That was hilarious. No TA and just be a bully. I can't stand it. Yeah, I'm not, I'm not a fan. Yeah, Matt Donnelly, you are. You definitely are. Jalen Miller, I watch all your videos. Thank you. Thank you. Chris Win Lambo, the legendary. The one, the only. Win Lambo. Nobody compares. Just win Lambo. That's great. What's going on, ladies and gentlemen? Cheese Chaser in the building. What do you think about the utilization being at 100%? Bro, glitch or legit? My take on it, I know there was a lot of people, with different opinions out there, but I think it makes more sense since AMC has started to rally and you see the order flows for the first time in weeks positive. 77% of orders today were positive, 25 orders totaling 13.69 million. So to me, it makes sense that, people holding on to shares, because if you're lending out shares, you're obviously a long investor. You're not lending out shares if you're a short seller. So they would be holders of AMC. I think that kind of implies more upside from here, because if you're a hedge fund or institution, why would you lend out your stock if you thought it was going to go up and you'd make more than 2 to 4%, whatever the cost to borrow rate is at the time? I think that's the straightforward answer. And I think that's the best way to look at it. I think it shows where people are starting to price in more moves to the upside. And I mean, for good reason too. There's been a lot of good news lately. Markets are just confused. Not financial advice. Smash the like button. Oh, yeah. Not financial advice, but, I mean, don't short the like button. Short the SPY. Don't short the like button. That's a great question. And I'm open for opinions there, too. You got another mod position? I believe so. Yeah, bully that like button. What is up, Warren? Will the CPI numbers, inflation be better or worse than expected? Thanks. I'm caught on that myself. I have no idea, to be honest. I can't put a set of events like this happened, so I think this. I can't say that to CPI coming in higher or lower, if that makes sense. I mean, you've been to a grocery store lately. It feels like it gets more expensive every time you go. So I kind of have a downside or a upside bias. I want to lean towards it's going to be bad. And considering the markets have bounced quite substantially in the indexes, keep in mind, I mean, the stocks that we invest in have not really bounced all too much. But it looks like we have more room to fall from here than rise. And it doesn't seem like anything is getting better. But, that's why I have positions for the downside and for the upside. So either way it goes, I'll still make money as long as there's a move. if we have a flat day tomorrow, that's going to be a dud for calls and puts. But I don't know. If I were to say, probably higher than expected. When does the FOMO kick in? I don't want to miss out. I mean, I think it's kind of starting. I think institutions are even trying to get ahead of it. I mean, if we take a look, what the hell? Jesus Christ. That's new. What? Look at these trades. Wow, I didn't actually look at them like that, but a $50 strike, a $50 call for April 14th, 952 contracts at 52 cents a piece, $49,500 a sweep. So they instantly wanted to get into their positions. They said, hey, we'll pay the ask price, because if you're trying to get into a call, you got to pay the ask to get filled right away. And I mean, that's crazy. I'm honestly kind of shocked by that, because that's an extremely bullish position. That's not like you're buying a call in the money, which is a bullish position, but I mean, your break even's really low. I mean, this break even is like over 100% out the money. So I think that shows a lot. But you're also seeing a February 18th, 1350 call, 1750 call expiring tomorrow, 1850 expiring February 18th, $26 call expiring June 17th, $18 put expiring tomorrow, March 18th, $20 call. I just kind of want to see the calls. Look at Jesus. Oh, my God. They're getting a little wild with it today. Look at that. January 20th, 2023, $110 strike call. 227 contracts at $148 a piece. $33.6 thousand worth, which is probably a small position for most funds, obviously, but I mean, if you don't think the stock's going to 110, you're pissing away 33,000, which, I mean, no matter what size fund you are, doesn't seem very logical. So either probably somebody knows something, these funds know something is about to happen, or they're getting FOMO. Like you just said, I mean, that's either FOMO or they know what's coming. An $80 January 20th, 2023, $80 strike call, 180 contracts, $192 a piece, and that's another $34,000. $30 strike for March 18th, 409 contracts at 70 cents, $70 a piece. If I say cents when I'm talking about options, that means $70. That's 28,000. Okay. April 14th, $60 strike call, 658 contracts at 38 cents a piece, $25K. I hope you guys see how substantial this is. May 20th, $34 strike call, 223 contracts at $116 a piece, $26,000 for total value. $17 call for tomorrow. $21 strikes, 3 of them for July 15th. Okay. I can get behind that. July 15th, 3 trades that came in, all block trades. $21 strikes for all 3, all calls, all 3 of these trades at 200 contracts a trade. So this is one firm that is doing this, that literally put these orders in right away. Look at that. Yesterday at 11:39, which was today. 12:37, and they paid $309 per contract. So their break even is what, $24.09. $24.09. They paid $61,000 and then $62,000. So that's a $180,000 trade betting by July. AMC's over $24. That's quite substantial. Jeez. You haven't seen this on AMC in a very, very long time, especially far out of the money. I mean, like I said, that's a very directional, bullish position. Like your break evens, 100%, 200% out the money. That's crazy. So my account could change the margin account. I could change it back, but the process will take 6 days, and during that time, I'll be unable to trade. Do you think it's worth it to trade back, or do you? You can't just turn it off. I believe you can. I believe you can just turn it off unless you changed brokerages. Account got changed to margin account. I can change it back, but the process will take 6 days. I don't know why it would take 6 days unless you were like transferring, I believe. But I mean, I'm more of an active trader, so hate doing that, and I don't. I mean, take it for what it is. I don't think that's the biggest issue. I think brokerages lend out your stock regardless of if it's a margin or cash account. To be totally honest. I wish you would stream earlier. I'm on the East Coast. Oh yeah, that's yeah, that's my problem. I just do a lot of other things during the day, a lot of other work too. I want to just do full YouTube, but because that's what I love to do, but not quite there yet. We'll get there. We'll get there. I'm with you on that. Trade back, or do you think I should leave it on a margin account? I mean, things right now is probably not the best time to, like I said, to be 100% honest with you. Tomorrow morning's going to get crazy. I mean, tomorrow you're going to see a gap down or a gap up. If this SPY on the 1 minute at the end of the day today didn't show that, I mean, by the time you wake up tomorrow or you're looking at your cellular device or computer, yeah, markets are going to be up a lot or down a lot. What up, bro? What's going to get crazy? CPI at 8:30 in the morning. And that's what the markets are waiting for. That's why we haven't done anything in the past. I mean, we have seen a decent rally. We've seen a gap up today. Without the gap up today, the markets wouldn't have done anything in like the past week. It moves a lot, sells off at the end of the day, but we haven't really moved besides for today. But a very interesting trend that has been happening is for companies that are beaten into the ground, like your dogged on companies, like a Twilio that went from $457 at the peak down to $172 at the lowest, only bounced up to about $200 before earnings, putting them at close to pre-pandemic levels. Like July 9th, 2019, they were at $150. Stocks that have gotten beaten down like this, they tend to rally on earnings. Twilio is up 18.21% because, a lot of that bad news is priced in, but same thing to the opposite side. So if you see stocks that are like Facebook that really haven't took that beating, I mean, same thing with Disney as well. Hopefully Disney hits. I got some spreads on that. If Disney closes over $172 by Friday, $75 will turn into $2,500. I'm not going to hold my breath, but if we have a very positive day tomorrow, certainly could happen. But that was a side note. What was I going to look up? Oh, Facebook. That's why you want to learn options too. You get a shit ton of risk to reward. But, Facebook, perfect example. Bollinger Bands. We really hadn't sold off heading into earnings. We had sold off, bounced back up to this equilibrium at the same levels we were throughout 2020, pretty much that median range. And yeah, you see what happened. There wasn't enough beating heading into earnings. And they're very important right now. But where I'm going with this is that the markets, they're not beaten down heading into CPI. I mean, they're at the highest end of their bounce that we've seen pretty much. Yeah, we fell to 420. We're at the highest range. And I hope you guys see how important this level is, too. I mean, it's kind of crazy when you look at it like this. That's why I like to follow the broader trends. But this was February 2nd. We're seeing this top. This was obviously today. So in that case, it doesn't look all too great. And something else I do want to point out as well while I'm on this topic is how the markets tend to sell off. Because, they tend to go down, tend to bounce up, go down, and then bounce back up, and then finally go down. And I think we talked about this last night on the live stream as well. You get these M or W shapes. Well, it's really a W depending on what angle you look at them. In here, and then you finally get that sell-off to a new low. W's back and forth to these key levels, and then you finally get that sell-off. So, you could see the key levels in here, and then you finally break down. March 2020 was the only exception to this because it was so violent. And even then you still seen like a V-ish, like a check mark type little recovery. And that was the craziest shit ever. Like, things don't get crazy until you see until the markets get halted. Like 7%, 10%. Wait, it's 7% the markets will halt. And then I believe it's 10% after that, right? Hold on. I lived I was investing in 2020 and was through that. Been investing since 2017, but I forget what it is. I know it's 7. What? Okay. Circuit breakers halt trading on the nation's stock markets during dramatic drops and are set at 7%, 13%, and 20% of the closing price of the previous day. It'll halt for 15 minutes if the drop occurs before 3:25 p.m. If the markets drop 20%, the markets close. Now, I don't think that's on the table. Unless CPI came in at like 12%. If CPI comes in at 12%, mark my words, we're dropping in between 7 and 20%. Like that would be that would be a black swan event. That would be something nobody thought of, nobody expected, not one person. And you'd see a revaluation on a rapid level. But even the other day when we didn't really have that big catalyst, we fell about 5% on the NASDAQ at one point right here. So that's why I'm trying to stress how important this is. But a huge buying opportunity with AMC, with other, just everything. Besides the large cap stocks. Microsoft's a good choice too, but yeah, and NASDAQ's already starting to get a little clippity clapped. 10-year treasuries, that's going to be important too, because if inflation is high, which it could be low, I just hope you guys are learning something here. But if inflation does come in high, the 10-year treasury yields are going to spike hard, very, very hard, because they're going to price in more rate hikes and people are going to sell off bonds to buy them back at a higher rate. So I probably should have played TLT, actually. That was probably the trade. Fuck. Damn it, why didn't I think of that? Damn. That was probably the trade. CPI, yeah, it doesn't matter to us so much, but it does affect the market. Yeah. That wasn't a very popular saying for a long time. over the past 6 months to a year. But it didn't always affect the markets like that. Like CPI really only started to increase on a rapid rate like late summer of 2021. So, it's a relatively new thing, but uh, the markets never really used to sell off. AMC never used to correlate the markets this much. Like for a while, the markets would be down, AMC would be up. Markets are up, AMC's down. Like that negative beta was crazy. Mm. My chart told me puts on Disney. I was wrong. Yeah. I got the call debit spreads because that was the easiest way to play it. Cheapest way, less risky, highest risk to reward. But the charts can fool you. That's why I don't really care for technicals all too much. Besides on like a day trade, like obviously pay attention to, like when I day trade, I like to pay attention to the 1 minute candlestick chart, obviously, but key levels, right? And just candle formations. But these moving averages are some of my favorites because you'll find a lot of support, goes above that and also VWAP. But that's a topic for another video. But yeah, if stocks, like I said, if stocks are beaten down heading into earnings, it seems like a lot of that bad news is priced in, and then you end up seeing a rally. But if they have not gotten beat down heading into earnings, you do tend to see a rally. And the fact we didn't drop today kind of leans me towards a negative day. But if CPI comes in at like 6.5%, the government's number, right? Not the real number, because we all know that's way, way higher. But the government number, the consumer price index, if that comes in at like 6.5%, markets are going to tear. Markets are going to go crazy. It's going to be a very violent move to the upside. Yeah, if they release the real number, markets would drop 40%. Oh, yeah. Oh, 100%. This guy here, did you go over BlackRock buying 5 million shares or dollars? I forgot which. Let's... I don't think I actually looked for them, to be honest with you. Is this... I mean, they have been big buyers recently. Them and Vanguard have upped their positions in the past year to 9.16% for Vanguard and 8.3% for BlackRock, and about 623,000 or 623% increase, 514% increase by Vanguard. But I mean that's it, pretty much a given. Let's go ahead and type it in. Who said it? Yeah, who said it? Some people recycle old information. But I mean they've been buyers, but nothing recently. The last actual 13F filing we got from BlackRock itself was November 9th. And we've got their funds, but nothing we really haven't known already. Some people just recycle old information. Short the VIX, talked about TLT trade this morning, looked back at last couple CPI and had no inference before and how passed on that trade. Oh yeah, I mean, it might be priced in. You really would need to see a decent move. That's like with earnings too. Like market makers try to price in, what's the most it's going to rally or drop. Same thing with TLT. So you'd really need to see expectations get flipped. But the thing is, at the same time, markets are not pricing this in. Usually, all right, this is pretty crazy. With the 10-year Treasury bond, usually the markets will drop when the yields start to rise. Right? So, beginning of the year. This was December 31st. This is the last day the yields were low. They started to spike January 3rd, 4th, 5th, and every other day since then they've been on an upturn. What happened December 31st on the spot? That's roughly the same time we started. That's roughly where we peaked out at. 2 days before we peaked out. So once yields really started to rise, the markets really started to sell off. And that those big rises, peak of the market was January 4th when investors started to say, hey, yields are rising, what's going on? And they were paying attention to this. That was when yields were only down here. Right here. And then the markets really started to freak out. But they've risen quite a lot from February 2nd, from 1.76% to 1.92%. In bond terms, that's crazy. That's a big-ass move in bond terms, unless you're looking at a crash type situation. But that's a decent move in a relatively short amount of time. And markets are not paying attention to it. They don't care right now. It's all about CPI. Let's see, what's February 2nd? Yeah, we've, just bobbing in this area. But if that starts to move a lot, people might start to pay attention. But definitely a good observation. I didn't even think about it today. I don't know why. That should have been a go-to. Because usually TLT is pretty cheap. So you can get decent moves. I'm here. What up, everyone? Tyler, what up? Smash the like button. Yeah, don't short the like button. Don't short the like button. And this week been juicy. Oh, it has been. 600 shares holding for generational wealth. There we go. Is the market going to crash tomorrow? I mean, it's either going to crash a lot or it's going to rip a lot. Like, I wish I could say either way. I position for both sides of the coin. But, yeah, so I'm okay with either way. But, it's tough. It's a tough call. It was 68 to 3K on Facebook last week. How did you do it? Well, it was the same logic as what I said, that companies before they're actually beaten down, they were tending to drop. Besides Microsoft and Apple, because they were I think they sugar-coated their guidance a lot. And Facebook historically is not afraid to give bad guidance. But on top of that, it was having that downside bias. I thought the stock was going to go down because of that. But at the same time, it's been this strategy that I've been doing. If you get a clear direction, you have to have a clear direction. But I'll do like a 2 to 3 week out contract. If you get a consistent sell-off or a consistent rally throughout the day, then you could go out to like the March 18th or the Aprils. The Aprils are really good because if you get the wrong direction, they don't really decay as much. But I've been buying, 5 to 10 contracts. And once they go up 20, 30, 40% before earnings, especially the day of earnings, the contracts get juiced. I mean, we made 150% on Disney's, and Disney only moved up 3%. Like, that would not happen on a normal day. So, or Corsair, $7 into $52, and Corsair had a 1%, 2% move before earnings. Maybe a little bit more, but I sold them out at the lower end price. I think they closed at like 70 something. I sold it at 50. But Beyond that, earnings, you get a lot of IV. So if you're doing that and you have that clear direction, you can sell out, say, 8 of those, make 2 free, or sell out, couple and keep a couple for free. Yeah, longer contracts don't kill you on IV. Yeah, and in this day and age, it's like Squid Games. Like, if you fuck up, you're gonna get destroyed. If you do good, you're gonna be rewarded, like just like that, So, kind of like Squid Games. We're in a Squid Games market. Like, watch your P's and Q's. But that's also part of the problem I see with right now is, especially with Apple, because Apple is so dependent on consumer demand, that I think 2022 without stimulus, my opinion, is not going to be as good as people would hope. And they did not allude to the guidance. They don't give guidance since 2020. But they, it was kind of mixed. They kind of said some bad, some good, but investors were like, hey, it's Apple. They always do great. But I think Microsoft actually had one of the biggest effects on the markets because of its size, but also Microsoft's more of a company, people have to have. Like, a lot of people were saying that they run their business through their cloud services, Azure, I don't even know how to say that, but whatever that is, and that they need the service, that they could just raise prices over and over again. But yeah, I think you're getting a lot of sugar-coated guidance too at the same time, which drags out this whole crash scenario, because guidance is the most important thing. If CPI comes in under 7, I'm dropping another 2K on AMC. Oh yeah, things are gonna go crazy if that happens. Banks had to get together to figure out what to do about Archegos. Crazy. There's about to be craziness and volatility in the market, in my opinion. Oh yeah, and I mean, those funds that did not get their shit together before this are in a whole lot of pain right now. Because I mean, you got to think about it. Like, it costs a lot to hedge out your portfolio too, So, and especially in this market, like, dude, you're just getting whipsawed. There's no direction. Hit that like button, family. We need 37 for 100. We have 178 people watching. Show TCI some love. Yeah, don't short the like button. Don't short the like button. People ask me if I'm okay. Like, people ask me like, dude, are you okay? You're like drunk or high or something. It's because I'm hype, baby. You gotta get hype. So I'm gonna kind of try to relax today. You know what I'm saying? Because Mr. Simon in the building. Oh, we're blessed with his presence. Shout out to the mods and everybody with the green name, like Mr. Good Old Simon. What was the expiration date on the contract? 3 months out. I thought you bought them same week for that kind of gain. Yeah, I believe the Facebook's, I believe February 18th. But I've been doing that like with Square. I think Square is one of those companies that's going to bounce back. I mean, it's priced for its worst case scenario, slightly lower or slightly above where it was pre-pandemic. I think and the business has grown 26% on average in the last 2 years. So, when you're looking at a chart like this, I am not going to bet this Square goes down. So I have some Square calls that are up like 35% that I spent more money on. I spent like $800 on this because I have high conviction that Square is not going to go under 2020 levels unless Bitcoin goes to 10,000. Then I'd probably be wrong on that. But in that sense, I don't think that's going to happen. So, with Square, for an example, I did do April calls, because April 160 calls, because I think, hey, Square earnings, you're going to see that bounce. But it just depends, I guess. It's safer to do like 3 months out. Most certainly. Yeah, 68 into 3,000 is 4,400%. It's a lot. Yeah, I mean, I like to say though, I want to say those trades don't happen all the time, but they happen. I mean, I've had two ridiculous trades like that. And, I'm not the guy that's going to go in there. I try to make calculated decisions like with Square, with something I have logic behind, Facebook along the same lines. But that is a lot. That is a lot. 4,000% is certainly a lot. But I've hit $15 into 3,000 per contract. Unfortunately, I only had two contracts, and that was on Redfin. That was a crazy trade too. I believe 2020-ish when things started to recover and they had their rally. But they happen. I mean, the same week we hit the Facebooks, we hit Snapchat earnings, which if I would have got closer to the money, I would have made a lot. I would have made a shit ton. But actually went out a little bit further on those, went to the Aprils on those. So that would have been probably another 2,000 to 3,000% trade. But it was like almost 1,000%, like 108 something. I mean, if you held them longer, you made more. But yeah, and then we hit the Ford puts, which was like 150%. So, I mean, you can put a certain level of experience, like conviction in it to help your odds. But yeah, that was a crazy trade. Facebook was the largest single drop of market cap in any stock in history. So that was like the trade. Unless you're playing like a Google and you're buying something that's in the money or something that just could drop a lot during a crash. That was like the trade. Azure. So it's good. It's real good. I've been bullied by White tonight. Oh, David Johnson in the building. Doing a great job. Good info. Thank you, brother. All the kiddos picked up from work, and thank God all are off tomorrow, so I get to drink more Bud Light. Life is good. Oh, yeah. And then you get to wake up and see your portfolio and either be really happy or really just gloomy. I'm not going to say like sad or mad because hopefully you guys aren't, but yeah, there's probably going to be some emotions tomorrow. Dan, I do think we're about to start in May. Been trying to get my emotions grounded at the same time. Oh, yeah, emotions. Emotions are key. Tweeted stream on Twitter. Okay, there we go. Liked and subscribed. Yeah, don't short the like button. Don't short the subscribe button, DCI, you think if we end over 20 on Friday, we could have a gamma squeeze? I see. Would we have almost 90K contracts in the money? Yeah, definitely. That's something I said on Sunday too, which there wasn't anything definitive, right? I knew we were heading into a volatile week. We definitely got more announcements than I actually expected. The new executive from Frito-Lay's, that joined AMC. I think that's a big reason why AMC popped today. But I don't think you were here, Mr. Simon, when we were going over these trades. This is the first time in pretty much since November, where the block trades and sweep trades by institutional investors were bullish for the day. Today, 25 orders totaling $13.69 million. Positive order value was 77%. Over the past week, the positive order value was 39%. And yesterday, now it doesn't show this. It's showing us for today. It says yesterday, but it's today. It was only 10% yesterday. So you're seeing a lot of firms going bullish. But what's even more crazy, and I wish I had looked at all of these individual orders before I made the video today, which I'll probably mention this because I think it's quite significant. Look at this. April 14th, $50 call, $50,000. By April 14th, a firm thinks AMC will be $50.52 to even break even on these calls. That's insane. $13.50 call, $17.50 call, $18.50, $26 call, 110 strike call. That's ridiculous. $110 by January 2023. You have not seen that in a very long time. $80 strike for January 20th. There's a couple more too. $60 strike call for April 14th. $34 call for May. Where was the other ones? $21 calls, 3 of them put in by the same firm for $61,000 a piece, and then $62,000 with a break even of about $24. So you have not seen this kind of bullish activity in a very, very long time. So this means one of two things. This means that the hedge funds and institutions know something that we don't, because who the fuck would be making all these trades for the $110 strike, $60 strike, $50 strike, $80 strike for the next, 3 to 9 months? Who would do that? Unless you knew something was coming and you had some kind of insider information, or you were just going to get your buddies to make the stock go up. Something along those lines. It's very important because you don't see this happening. These are large trades. These are not 1 to 2 orders. These are $35,000, $30,000 minimum. So they definitely know something that we don't. That's for sure. And I would honestly go on CNBC and say that, or go on anywhere and say that, right? Kind of crazy. And I look at this every day, and you have not seen that kind of activity in a very long time. Would you guys consider playing caps on AMC now? If so, it would be some good strikes and expiration dates. I told the trading group today, because I was asked if it was a good time to buy, AMC calls, and I try to look at the risk to reward, right? So I knew that, tomorrow is going to be a big catalyst in the morning. That's the most important catalyst we have until March 10th, and then March 16th, the Fed meeting, and the next inflation reading March 10th. So I said I personally wouldn't. I personally wouldn't have bought a call, at least like midway through the day when I was asked today, just because of that. But I do think, going over all the information, the news, all that, I do think it's a decent time to buy longer dated calls, like January 2023s or even the 2024s. That's where where the money's going to be, because if you had bought a call today and the markets are down 3 to 5% on the indexes tomorrow, you're going to lose a lot of money. So I would get a lot of time, closer to the money, longer amount of time. That's really the best. I'm the only woman on this stream. We got a couple. They just don't like to talk. We love them though. Batman would. Nah, he wouldn't. He would. Yeah, he wouldn't. I want one. I want NFT. A flying duck. I'll continue to work 10-hour shifts at work to hold till noon. Oh, there we go. What kind of activity? I don't know what you're referencing, because I just said a lot right there. See, there we go. Stephanie in the building. Yeah, we usually have a couple. You guys are the few. YouTube analytics are like 7 to 8% female, which is unfortunate, because females, while they are more scarce, like substantially more scarce in the finance space, they tend to do a lot better than males. They tend to be more calm and collected, and Guys tend to be more gambly. Like, you don't see very often a female that YOLO'd everything and lost $500,000 on the option subreddit, the subreddit for options on Reddit, things like that. So it's good. It's good. I'm glad you guys are here. Just join Big Nothing Burger tomorrow. I need my $18 calls for AMC to stay in profit. I wish I could say it's gonna be a nothing burger, but I mean, if we come in right on expectations for everything, then it probably would be. But odds are we won't come in right on expectations. I mean, the government was saying that expect high unemployment rates. Expect a lot of jobs to be lost because of Omicron. We get the jobs report, and it's one of the best months we've ever had. They don't know. Nobody knows. Nobody gets it. I mean, so I think it's either going to be way higher or way lower. Like, in CPI terms, too, I should point out that, like, way higher or way lower could be, like 0.2, 0.3 off of 7.3%. So if it comes in at 7%, that's a big win. If it comes in at 7.6%, that's a big L. Markets are probably going to sell off that news. So that's a big move for CPI. A big move is a small move for CPI, if that makes sense. Month over month is going to be important as well. Just everything in the CPI is going to be important. Futures are doing the dance. Definitely looks like we might have, if anything, a little bit of a rush to safety. The Dow's hardly down, 0.02%. Nasdaq down about 0.30%. But nobody really knows right now. Bond yields slightly up, and that's going to be important as well. But if it's good, I think you could see a lot of recovery trades do very well tomorrow as well, which AMC falls in the recovery sector. Believe it or not, it's in the recovery sector. And like Disney, I mean, Disney Parks business roars back as company beats earnings expectations, stock soars. Disney makes up ground on Netflix with blowout Disney Plus subscriber ads. So I think that could actually be a really good trade if the markets are good. Disney, recovery stocks, AMC, they all should benefit a lot. I'm a girly girl. Oh, there we go. Yeah, Stephanie, drop the Twitter. And follow me on Twitter so I can follow you guys back. I think it's in the description of this. If not, it's in the pinned comment of any other video. So go follow me. Go follow me on Twitter. Pull up the 2023 calls on Yahoo Finance. Let's go over it together. Look at open interest and IV. See, we can do that, but you also got to remember that 2023 is actually not that far away. Like, it sounds like it's far away, but Theta will start killing contracts for 2023 more slowly than obviously weeklies, but it'll start killing contracts in like 3 to 4 months. You'll start to see like, damn, the stocks ain't moving. The contract's going down or going up if they are moving in your direction. So, you just got to be mindful of that. Like, I've bought, I remember I had Neo back in the day. I had Neo calls. Like at I must have bought them like close to the peak because I was positive on them, and then I went really negative. But it was about this time frame. I had like 10 months on the contract. I'm like, that's a long enough time, right? 10 months, it should see something by then, some kind of bounce. Bounce never came. Those contracts got killed fast. So, it's just a little bit different, but. Actually, you said Yahoo Finance. We could check it out. I've had a theory for many months now that when the short interest get closer to 30%, then AMC will squeeze. What do you think? I think it definitely, helps the situation. I don't think there's a magical number necessarily, but I do think the biggest thing when it comes down to the squeeze, and I don't think people talk about this as much, or maybe I don't see where people talk about it, but the market's coming down. When the markets come down, that's where the shorts are really vulnerable. And if you put it in this perspective, it's really easy to agree. I don't think anybody could deny this. If you were a short seller, imagine that you're a short seller on some fucking penny stock on SNDL, right? And we'll look at those options in just 1 second. Let's pull up SNDL. I know somebody's going to be like, this motherfucker shouldn't make SNDL the example, but just roll with me real quick, right? If, you shorted SNDL, say right here at $1.40. You shorted it. You wanted it to go back down to 40 cents. You shorted it, 140. Stock went up. You lost, 5x? You lost almost 5x, 4x. Stock went to $4. You're not going to cover at the top unless you absolutely had to. Unless you were margin called and you did not have money to service your margin call. Now, not all hedge funds have to be margin called at one time, right? Some hedge funds will be margin called once the MOAS starts. Once AMC goes to 100, like Melvin Capital, guys like that start to fuel the fire and slowly pour more gasoline on the fire until it gets to a certain price where even the big guys don't have as much money to service those margin calls. Then they have to cover at the top. Nobody wants to cover at the top. Nobody wants to cover unless they are forced to cover. That's why, the shorts have not covered yet. So, like I was saying, you short the stock at 140, nobody wants to cover on the top. Hedge funds know the stock will come right back down as long as they have enough money to remain up here when they get those intraday margin calls. So that's really the key to it. And that's why I think the market's falling. And even some hedge funds, say half of the hedge funds that have short positions on AMC get wrecked. Say half of them make money, but half of them get wrecked. Overall, the markets drop substantially. Those half that got wrecked are going to be forced to cover when the stock rallies, and they're going to drive up the share price to crazy high numbers. And then even the guys that made money during the market crash, that hedged and just did great, they will be margin called at the top as well because the stock just went crazy because the other guys covered. So hopefully that makes some sense to you. All you guys, kind of difficult to articulate it. I think that was probably the best example I could say, but that's really the whole thesis on that. So I think that's more along the lines of how that would work. I think that's really the magic, if you want to say magic behind the squeeze. But let's take a look at these options really quick. Options. I don't ever look at this. Hold on 1 second. Oh, I hate how that's laid out. Why is that like that? Yeah, I'm not gonna look at it on that. That's too hard to. You guys will be able to see it a lot better on here. Way easier to see it on here. Maybe I'm just not used to it, but so let's do September 2023. Well, September 2023 would probably not be bad. That's a lot of time. But the January 2023s, those are going to get clapped before you know it. If you don't see the MOAS or move to the upside, cuz I'm sure IV's crazy. But let's look at them. And if I were to personally, oh shit, I'm stupid. I was on Apple, but they should have. Yeah, see, fuckers. Yeah, they don't have the other contracts. January 20th, 2023. Take a look at the calls. See, just not that appealing. Implied IV over 100%, which is pretty typical for something like AMC. But yeah, I mean, just not very attractive. You're spending $400 for a $40 call, and you only got 10 months on it. So you need what? How much? Your break even's $45.59. So that's over 120 some percent to break even. I mean, not the most attractive, because that theta will start to kill you. I mean, I would honestly rather do even like a $60 call for 2024. Probably the best way, though, to get skin in the game with options, to be quite honest with you guys, is just doing debit spreads. Like, you could debit spread this for, that's solid. I mean, I would probably do some debit spreads, maybe buy a call or two, but if you could debit spread this, you could buy, and you'd want to do this probably in one order. You don't have to, but I like to do it that way. You buy the $50 strike for whatever expiration. Buy the $50 strike for $540, and then you sell the 55 for $495, and that means you would pay what is that, $45 for this spread. Your max profit would be $500. So that's a 1,000x if AMC closes by 2020, or 1,000x, 1,000%, over 1,000% if AMC closes above $55 per share by January 2024. That's not bad. I actually might look at some debit spreads on AMC, or you can even do, like, I don't like to do this as much. It probably wouldn't make as much sense, but do like what? Do like the buy the 45s for $568 a contract, sell the 55s for $495 a contract. So you're paying like $70, $70-ish dollars if my math is correct here. And then your max gain's $1,000 on that if the stock is over 55 by 2024. That's probably the way to play options, I think. Looks like it. Smash the like. Oh, yeah. There we go. Out the money call, deep in the money put. Married, it's how they create liquidity and the appearance of shares. Yeah, I agree. It has just been a long time since you've seen that kind of out of the money activity on the option chain. I might actually do that trade. That is actually pretty solid. $45 to make 500 if the stock's over 55. Or you can even give yourself better odds. Pay $67, buy the 30, sell the 35, cost you $67. But if the stock's over 35 by 2024, you'll make 500. And if the stock goes to like 40, you'll make 500 next week if it went to 40, or went over 35. The spread starts to widen the higher the price goes over your strikes. That's more like medium, more advanced options, but like options trading, but that's probably the way to do it. Just unlocked and did my first debit spread today. Actually, am probably going to lose it since it's a very narrow butterfly spread, though. Oh yeah, spreads I think are really good. There was somebody that did Facebook put spreads, put debit spreads. Obviously, I mean, this is not the market to do credit spreads. Don't do credit spreads. Do put and call debit spreads if you're going to do them. Not financial advice, but you will get clapped on credit spreads. So, I mean, no bueno in my opinion. But yeah, they did a put debit spread on Facebook for, I believe, February 18th for 2 pennies or $2. 2 pennies in option terms. $2 a piece. And it turned into 200. That was 10,000%. What? That's ridiculous. $2 into 200? Spreads are the ways to go. Sounds like the day trade trick you showed us. Oh yeah. Yeah. This is yeah. Yeah, it's just like with the day trade, you do it at different times. Like with this, I mean, you'd want to do it at the same time more than likely, because I mean, I would think. I mean, that's the way that I like to do them. But not all times are good for this strategy. But I think in a very volatile market like this, I think it could be a cheap way to get a lot of exposure. But yeah, you are right. It's essentially the same thing. Once in a lifetime play. I mean, yeah, for $2 to 200, that kind of is a once in a lifetime. I've had some crazy trades, but 2 to 200, that's ridiculous. I mean, cheap premium like that can be hard to manage. And I mean, even the Corsairs we had were 7 cents, but they were trading at like 2 cents the day before, but those only went up to like $70. So that was still would have, still been a good trade. Was still like 1,000% from $7 to 75. I believe that's where they closed, like 70 something. So you can get trades like that if you look at cheap premium, but I don't even like to look at cheap premium, which that's probably a good trade to do, is look at cheap premium right now, because things can move a lot. Probably not bad. I'll probably do that on more earnings trades now that I'm thinking about it. But yeah, I don't think a lot of people look at cheap premium like that, especially not in a debit spread form. It's kind of crazy. But yeah, while I'm on that note, if you guys are paying attention, what you don't want to do, and by all means, I mean, don't take my financial advice. This is not financial advice. I think this is sound facts at this current moment. Like we were talking about with the debit spread, the put or call debit spread, it works both ways. You buy one that is closer to the money, that is more expensive. You sell one that is further away, that is less expensive, and you pay X amount of dollars, whatever price it is. You pay money. You don't want to collect money. If you're collecting money from it, you expose yourself to that max loss. So in a debit spread, like I said, your max loss on a debit spread is like, $67 on this. Either 30 to 35. Your max gain's 500. Now, if you were the one to sell this, you would collect $67 essentially, and your max loss would be $500. So that's not like financial advice, but I don't think that's sound practices right now. So just wanted to throw that out there for you guys, because I know I was talking about it, and I know somebody's going to try it, and I don't want anybody to get clapped like that. I came really close one time. I came really close. I believe it was a put credit spread, and it was so stupid. I collected like $50, and it was like $1,000 max risk, but it was really far out the money on the SPY, and the SPY like came right there from where I would have lost and had to pay $1,000. Really, really close. I'm like, why did I fucking do this? But yeah, you just gotta be careful. just gotta be careful. Oh, Credit Suisse earnings tomorrow. Puts. Ooh. Possible. Win Disney Moon. Yeah. If CPI is good, I think Disney will be a big winner. Any word on Lucid? We hitting that 32. I believe when are Lucid? I believe Lucid earnings are not too far, early-ish in March. If we get a bounce, it should be really good. Last I checked, the contracts weren't down too much. They were down it was down like $20. But yeah. Only thing is it caps how much. Yeah, that is true. That is true. It caps how much you can make. But the way that I like to look at it, right? If this makes sense, that you're paying, like with the, say for the $40 strike, you're paying $600 for that up front. So you have a risk of losing that. Same thing with the debit spread as well. But you're paying $600 for $75. Let's just call it an even 10 or an even 8. That's probably what? My math correct? $75. Yeah, into 600. Hold on. Yeah, 8. Okay, I was right there. It was 8. So essentially for the price of the $40 contract, $625, you could do 8 debit spreads. Buy the 35, sell the 40s. So 8 times 500, what is that? 4,000? $4,000. So to make 4,000 on this contract, what would you need? 1,000 to 50, 1,000 to 60, 1,000 for 70, and 1,000 to 80. So you would need $80 per share plus your break even, which would be another $6. So you're gonna need like 86. What was that? $86.25 per share to make more than doing 8 debit spreads instead. Does that make sense? So, you know, if you did that and the stock was, say, $40, $50, because we don't know where it's going to be. We don't know if the move is going to happen sooner rather than later. I mean, we don't know. So while you are right there, if AMC went to thousands or hundreds, I mean, you definitely would want to have some calls too that were naked calls. Just could make as much as possible. But to get the same equivalent out of your dollar, AMC would have to be $86.25 per share. So that's the way that I kind of like to look at it, and then base my risk to reward off of that. But you are right. You are right. And I think there's a good mix of the two. So like with Disney today, I ended up doing which was stupid in hindsight. I should have done the February 18th, but I did the February 11th, so by Friday. Though I bought the 162.50 cents. They got the 50-cent contracts in that strike, and then I sold the 172.50. So that was like $15 a contract. They closed at close to 30, so I could have made them free, but I got 5 of those, which my max profit would be $2,500. Put 75 down. But before that, I had bought the plays a couple days ago, and they had went up 130%. So I said, hey, I got enough profits on my options. I can sell out, collect. It was like $200 in profit, like $220 in profit, something like that, and collect that. Put 75 more down. Give myself a lot of upside potential. If Disney were to go up 20%, I would have made the full $2,500. So I'm like, I could take that. Netflix fell like 20%. Disney could do the opposite, and did it like that. Still make sure I got profits, but I think there's a healthy mix of different strategies you can use right now for sure. Vlog, golden nuggets, always appreciated. Hit the like button. Oh yeah, let's get this video. Let's get this video out there. Oh, Mr. Sims. Oh, man. Yeah, we're showing up. Mr. Simon, Mr. Sims. Mr. Simon. Let's go, TCI. Pour the salt on the mouth, brother. There we go. There we go. Call 19 by Friday. Twilio was the play. Yeah. I mean, I tried to get filled on some Twilios, but I mean, they're just so far out the money. Debit spread on Twilio for the 285 to 195 was like $70-ish, and then the $500 or $5 difference, $500 max gain was like 40 some dollars. So, and it was like a 45-50% out of the money to break even. So I'm like, I know Twilio can move, but you know, it was tough to get filled too. Oh, pour some. That was a challenge. He said, pour some salt. Just mimic it. Okay, we're pouring salt. I didn't know. Man, the most I do is get on Twitter, but I guess I missed that one. People around me are like, did you see? I guess like Drake has some meme about like ketchup and preventing like kids or something along those lines. I was told that today. I'm like, what? Like Drake, ketchup, and preventing kids. Like, I don't want to know what kind of meme that is, but they're like, you don't know about it? You don't know? You haven't seen it? Like, no, I'm an island boy. You know what I'm saying? That's the last meme I kind of got it stuck in my head, so now I don't mess with them. TikTok is banned on my phone now because I'm an island boy. You know what I'm saying? Now it's going to be stuck in my head for another 2 weeks. So it's good. Real good. But yeah, AMC debit spreads for the win. I think that could be really, really good, honestly. Trey is the best meme at the moment. Oh, yeah. Oh, you gotta sprinkle it on the camera? Oh, can you see that? Ooh. Yeah, that's cool. When I work in the restaurant, you guys should see me. I'm like, with the cheese, I do that every day. So that's like right up my alley. Trying to make it. I would walk around just to piss people off and say that. Key one song. I keep that gun. Some shit. I don't even know. Oh. That's it, Tyler. Oh, yeah. Oh, we're going to get some tendies. We need to eat some tendies. If I am Stephanie, you owe us a steak dinner. Oh, yeah, that'd be good. My issue with steak, though, at restaurants, to be honest with you guys, I go to restaurants and I'm always, like, disappointed with steaks because I make mine a certain way and I do certain techniques that just make it that much better. And I'm like, man, mine are so much better at home. Like, you know what I do with my steak, right? Obviously, I'll hit it with, like, the fork or whatever, poke some holes in it, throw some seasoning on it, season it up all right. A little bit of garlic, a little bit of, what's it called? I don't even remember what it's called. But then, the key, what I do is I grill the onions a little bit in the pan, like saute them, and I put the steak on top of the onions, and then I flip the steak and put the onions that were on the bottom go back on the top of the steak. And I think that makes all the difference. Makes all the difference. Ooh, sounds good. Sushi. I like sushi, though. Sushi is fire. Not the raw stuff, though. I don't know about the raw stuff. Oh, yeah, Texas Roadhouse. Oh, man. I got this blooming onion. Oh, shit. Steaks are small at restaurants. Yeah, that too. I mean, when I get steaks, like there's this one lady that has been there longer than me at the restaurant I work at sometimes. When she's cutting like the casa meat, because it's a Mexican restaurant, she'll save me like big ass pieces of steak, like pieces that are like this big. So that's what I had the other day, actually. And I had two of them. So I fed one to the dog, obviously, because I mean that's kind of what you gotta do. But give one to the dog. But you are right, they are small at restaurants. That thing was huge. I don't even think I finished it. I think it was too big. But it's good. Oh, he's a chef and a day trader. Something like that. Yeah, I just like to make money. I also got my real estate license and have rental properties too. But what was great about that job for a long time is I could be on the phone with clients. I would schedule things. I used to work in the mornings a lot. And I would schedule things. So like after I got out of work, I would have clothes. I'd be able to freshen myself up and just right at work, and then go from that and go show a house after. I would schedule it so I could, email documents, sign papers, send documents, do all of that real estate stuff to people at work at the restaurant, still be able to do the restaurant and then just show the houses after when other people were getting out of work as well. So that worked really good for a long time. And then YouTube kind of took over, like just love doing it. Still do real estate from time to time, but you just get tooled around. I think my favorite part about having a real estate license is actually getting paid to buy your own rental properties. That's my favorite part. I mean, I bought almost $100,000 rental property, and I got paid after the brokers, because it's a 90% to you, 10% to the broker on your own properties. At least that's what mine was. You get it was $3,000 back. So I got paid 3% to buy my own house. I got paid $3,000, bought it for $100,000, and the brokerage got like $500, or maybe a little bit less than that. But I love doing YouTube though. That's my favorite. I guess I'm like nerdy, and I like watching numbers and watching talking about things, because I mean nobody will talk to me about this. That's why I always say from 10 p.m. to 11 p.m., but I'm always here till like 11:30. I just love talking about this stuff. You're a rental property. Oh, why is that funny? Tyler, marry my sister. Oh, man. Oh, you guys are funny. I know you have conviction and most times. Tomorrow we are kicking ass. Yeah. Oh, man. Oh, man. Just imagine if CPI does come in really low. It's going to be a field day. Everybody's going to go crazy. Just crazy. People are going to lose it. They'd be like, buy everything. The Fed's not raising rates. Dude. Oh, man. Watch it come in at like 6%. That's literally what you're going to see on CNBC. They're going to start saying, yeah, I don't think the Fed's got to go as fast now because inflation's starting to tick down. Like, just buy. Like, we're a buyer. That's what they're going to start saying. We're a buyer. We're buying it all. AMC 100% share utilization. Yeah, the way that I look at it is basically the straightforward approach, because share utilization is the measurement of how many shares have been lent out versus how many can be lent out. So if we look at it, 100% means all available shares, right, have been lent out already. And you got to think about it from an institutional perspective, especially when you're seeing option flows from institutions 77% bullish on the day, which has not happened in over 3 months now. If you are an institutional investor that has the option to lend out shares at 2 to 4%, Would you do that if all signs are telling you the stock's going to go higher? Probably not. If you can make 20 to 100% just by holding the stock, or 2 to 4% and lending it out, or maybe more than that, who knows? I mean, that's really undetermined. Then I think you're probably going to hold on to your stock, and I think you're going to be way less willing to lend out your stock. So I think that's really the basic, straightforward approach, and that's kind of, what I think is going on here. So I think it could be good. Data doesn't even matter anymore. Just buy and hold. 100% agree there. %. Oh, yeah. There you go, Stephanie. Look at that. Look at that. I had to check out the channel, too, but... 7. Oh, man. You're in there. Yeah, looking good. Looking good. If you know, you know. If you know, you know. Color stylish dresser, 2 with the hat. Yeah, I got another I got a St. Patrick's Day hat, and I wanna get more hats. I think it's cool. But some crazy ones would be cool too. Data analyst as well. And a business owner. Do you think BlackRock and Vanguard would buy a bunch of shares, lend them out, then out of nowhere pull the rug on the shorts and not lend them out, like baiting and switching? Possible. They definitely are big owners. What could have happened is, they were lending out shares, and then probably they probably did, honestly. I mean, even if let's say they're not really trying to be the guy that lends out stock, the stock rallies and then they want it back right away. But Vanguard and BlackRock, they are the biggest owners besides retail. So theoretically, what if they were doing this from $40, $30, and they did do this, now they want their shares back and they recall them? Even though the institutions, a lot of them would still make money, it would still drive the share price way up again. And, not all of their stock is going to be lent out, because they have ridiculous amounts, but it wouldn't surprise me if that is happening too. Dude skips every one of my comments. Oh, I don't mean to. Good luck, everyone. See you in the moon. I really don't mean to. Sierra Sancone with a super chat. There we go. Appreciate you. Appreciate it. You guys are showing love today. No, I really don't mean to skip comments. I don't skip comments on purpose. Sometimes I get to talking a lot and then it's way too many to read. But I don't scan and skip through who to acknowledge or not. It's not like that. But Mr. Simon, if you got the green name, it's a lot easier to see you. You know what I'm saying? So I always see Simon's comments. Sometimes I do miss his comments, though. Sometimes I get to talking for 10 minutes. What? Patty Mac chat? Okay. I will go back. Because Simon said to. Utilization of all meme stocks is now 100%. It means banks are pulling their lending across the board. This is a gigantic. 100% agree with that. 100% agree with that. I've actually noticed that as well. But yeah, I do think it is pretty big. I mean, because it's one of those things, the sectors, these meme stocks, even if you want to call that its sector, has just been beaten down so much that eventually the rotation into them was going to happen anyways. At least the ones with real business models. Bed Bath Beyond, GameStop, AMC, those were all going to come back eventually, right? Maybe not like your other ones that don't have business models, but all the good ones, I mean, they're coming back, and they're going to be unforgiving for the short sellers. Let's put it that way. Maxi Paganini, love you. You are my top tree information, guys. Oh, there we go. We love you too. We hope you hit it big. Simon says Moaz this week. Oh, yeah. Batman ticks at midnight. Buying a house after the gains from AMC, bro. Not financial advice. Oh, yeah. I like real estate right now. I want to buy another one, too. But I got to file them taxes first. Fucking Uncle Sam. Little asshole. Fat and Mando help boost Disney. Oh yeah, Disney. All that shit helps. Yeah, they got Star Wars now, huh? I think they bought that in the last... What'd they buy Star Wars? 2019, I think? Disney bought Star Wars. Those used to be some of my favorite movies. I've not watched them in a long time, though. Jimmy AMC seems... BBIG, he all hit 100% utilization. I believe some others, too. Yeah. Interesting. Like I was saying earlier, which pretty much ties into that hedge funds, I mean, if they're all of a sudden buying these contracts that are, some of them are very short term, like the $50 strikes for April, I mean, there's got to be some underlying thing that they know that others don't, that we don't, that even other hedge funds don't. You know, to see a magical 77% positive order value day, and all we got was a new executive hired to manage the growth at AMC. I mean, we've got bigger catalysts before. I think there definitely is something underlying going on here. About damn time, too. AMC is my biggest loss. It would make my portfolio look a little bit better. But, I mean, my portfolio, right? I mean, it's no surprise I got other stocks just besides AMC. But this is my overall portfolio. Right? Check it out. This is what my portfolio really looks like. Besides, I mean, you know, it's just like straight down, like that. Down, I think in the past 3-6 months, down like 38%. Finally have some things coming back. But not AMC. But AMC's going to have its time, baby. AMC in due time. AMC is like a little baby. You gotta just be patient, you know? That's the way that I look at it. Yeah, I'm going to get out of here because, I mean, it's 11:35, and you guys got to get up. Watch my daughter at probably 8:30 if she's looking out for me. Hopefully knows earlier. Well, actually, oh, shit, yeah, I will be up with the CPI. Damn it. But, yeah, I'll be up. It's like literally the day before Christmas. Like, even knowing the CPI comes out at 8:30, it's like I just want to see. I just get it, like, it's weirdly fun to me to watch the candles when fucking CPI comes out, like up down. But then it finally chooses that direction. But yeah, thank you guys. Thank you to the mods. Thank you for all the super chatters. If you guys want to join the trading community, linked in the description, I believe, of this live stream, if not in the other videos, and get yourself some free stock. Moo Public Weeble. Worst case scenario, you'll get yourself some free stock. You can instantly reinvest that back in AMC. If the MOAS is coming, you're definitely going to want as many shares as possible. So thank you guys. And until next time, enjoy your night. And I'll see you tomorrow.